Hi there, Ashley Reeve here. Welcome to another quick trade video. I'm back again to give you that economic calendar forecast and what's to be expected between the 3rd and the 7th of October. But before we get going, please remember that Quick Trade is a licensed financial service provider, as well as a licensed over-the-counter derivatives provider. Myself, a registered representative, working under supervision, and that means I am authorized to offer a bit of advice, give you some recommendations, but remember, the risk reward and the execution of your trades still remains your responsibility. So as I mentioned, I'm back. Where to start? We had a fantastic week last week. We saw dollar strength coming. We had the non-farm payrolls. You guys know that it does, and it is released on the first Friday of every new month. Last week, we saw a expected forecast or a forecast of 250,000 jobs to be added to the labor market. We had a wonderful figure there of 263,000 jobs that was created, creating, some strength in the dollar. We also had unemployment percentages and raises also doing very well. So, the job market is looking good. This has given the dollar strength, and obviously that having a opposite effect on some of the other securities like your Nasdaq, your S&P, and your Dow Jones, as well as gold. We saw some downside there after the dollar strengthened. Now, what's very important is for us to look forward and to probably forecast what could happen. And so we're seeing the dollar having broken through the 111 point area. We are now at the 112 point area. We're suggesting that the dollar could strengthen, this week to about 114 points on the dollar index. We do have the economic calendar that I'm going to show you in a couple of seconds. But I just wanted to mention that, please watch the dollar index because it's the global reserve currency. And when it does strengthen or weaken, it does have a knockoff effect on other securities, whether that be indices, whether that be commodities, or even your currency pairs. So we're seeing, some levels of 114 points, and whereby, if it does break above the 114 point, then we are looking at between 117 and 119 point area for the dollar index to reach. But let's go and see what our economic calendar is saying, and what, in more detail, what to look out for. So as always, you can see the strength of the dollar coming in is creating some good opportunities. I suggest you also attend our trading room session. There's 2 of them. You can join it to get more detail on the specific opportunities that we see in the market. So Wall Street sank on Friday after an upbeat payrolls report, as I mentioned, seemed to seal the deal on another outsized rate hike from the Federal Reserve. Don't forget, we are in the season of higher interest rates and high inflation. And we're seeing, the Fed raising more rates there. We are seeing a matching between the ECB and the U.S. Federal, Reserve banks with the raising of these rates. And, while the U.S. employers hired slightly more workers last month than markets expected, the red-hot labor market means the Fed's aggressive monetary policy is here to stay. So just as I mentioned, we're here, and we will see more interest rate hikes. And that's obviously, like I've mentioned in my previous videos, is for us to curb that inflation. Another thing to look out for in terms of inflation is Thursday, the 13th of October. When you do go down on your economic snippet, you will see the data showed some softening of the labor market, but on balance, it appears stronger than the Fed think is inconsistent with price stability. This simply means we're going to be looking at the consumer price index, the CPI. And when you look at the CPI, you're going to be looking at, the overall momentum of what is happening with the pricing pressure that's inclusive of inflation. And when that CPI result does come out, that puts a demand on the Feds to obviously tighten more of those specific interest rates to try and curb down that inflation. I just want to mention here as well, markets are heading into the reporting season on poor footing as U.S. stocks are on track to suffer one of the worst years in recent history amid concerns that the Federal Reserve aggressive rate hikes will result in a possible recession. So that has everything to do with the other securities that I just mentioned, the indices. When we look at the Nasdaq, we saw we are going down to 2020's levels, the S&P as well as the US 30 or Dow Jones. We are currently in a very large retracement, and we've sunk down to a very strong pivot support level. So it's going to be very, very important for you to go and look at that overall charts, the monthlies, the weeklies, and the dailies to track where is the momentum of the price, and obviously synergize or at least connect it with the fundamentals that are obviously coming out. On another note, here's a couple of weekly forecasting in our CFDs. We have Brent broke through a very good range there, which I've mentioned last week, and we're seeing a bit more upside there. What's very important about Brent and WTI, they normally correlate together. So if you are going to long Brent, I suggest you look at WTI for a possible long there as well. Yes, the WTI might be a little bit behind Brent, but they are moving in, a similar direction. Gold is the fear factor instrument of choice. You guys know by now that this is correlated negatively with the dollar. The gold saw it plummeting down last week Friday with those US job reports coming out better than expected. We're seeing levels about 1650 for gold to reach. We're currently in a sell trade there, and we do see it moving down further because that dollar is still strengthening. So obviously a lot of investors are tuned in and they're watching for Thursday to see the CPI figures. But we do see gold going down a little bit further. What's also important to note, NASDAQ, I said to you guys, is at a support. S&P is at a support. And the US 30 is at a support. And always remember the size of those indexes, with the S&P being a 1,000-point index, and compared to the NASDAQ and the US 30 being a 10,000-point index. The sizes there means a world of a difference if you're a scalper, or, and if you are trading it a little bit more long term. So you'll be holding longer, but, all our traders that are scalping it, they're going to find much better distances in between pivot points. So just make sure that you tune into the trading room and you'll get more detail on that technique. And then lastly here, traders, we have two FX pairs. GBP CAD, we're looking for a short down to 1.48126. The key pivot point there we're currently trading at is 1.54068. And what we want is we'd like a daily momentum time frame to be our confirmation candle. All right. And that is at or below 1.51504. Your risk and reward, please determine that before you enter that specific short trade. And then lastly here, we're still dealing with an AUD/JPY, still to the same level of support there, 0.87233. And we're looking to exit at that specific area, but we would like a daily close below 0.92055. As mentioned again, very interesting week, but we are pro dollar, and we do see it, strengthening to about 114 points. Join me in the trading room, later on. Let's see what happens. If there's anything to report before Thursday or Friday, I'll be back with that. But for now, please do risk and reward. Make sure it matches up with the technicals and the fundamentals, and then you'll see me again. This is Ashley Reeve. For now, checking out.